JB here. Hope everyone's doing on today, March 10th, 3:21 on this fine afternoon. Retake number two here on the afternoon rant. Apologize for that. Talk quick about the market, some names I'm looking at, go from there. But what a bloodbath, I guess the best way to describe today. S&P is down nearly 3%, NASDAQ over 4%. Actually, what is it right now? Just a tad over 4%. Right at the open, just a meltdown. And I hate to say like a meticulous, slow melt. That's kind of what it felt like an ice cream cone on a hot, sunny summer afternoon. Uh, and it's like the kind of action you don't really you don't see at bottoms, you know. So that's kind of the thing that gets me a little worried. But we've had some of these reversals. We had it on Wednesday. We had it on Friday. I would love to see it close back over that 200-day moving average, which is not 200-day, that 563 handle that we hit in October. I don't know if we're going to get it, but it kind of helps keeps things in perspective. We're not even at September lows just yet. And all the headlines, I'm sure there's going to be a lot after the close. I'm sure there's going to be a markets in turmoil by CNBC. But today, similar to some of the other moves last week, there wasn't like one catalyst you can put your finger on. It just, I put on the watch list. It's like an umbrella of uncertainty is kind of weighing on markets. And they like to use the quote from POTUS on Sunday, talking that he not going to rule out a recession, you know. But if the markets were going the other way, and he said some other comment, they would say, well, he's not an economist, right? But because the markets are selling off, there's weight behind him. So, either way, it's just they just try and pick and choose things to rationalize the moves. But again, to me, it feels like uncertainty. And you had the Apple, I guess, the pushing off the Siri that helped push. I mean, Apple's having its worst day in what, 2 years, down 5%. Then you have Tesla, which, people are saying Tesla's like getting a bumper sticker for if you're on the left. It's like you have a bumper sticker for the right, so you get rid of your Tesla. I mean, that's the kind of narrative, but it's when you have a stock that can easily be pressured, that's some of it. So that's down 15%. I don't even know what its biggest down day and how long, but those two together, a large percentage of the S&P. And I was looking before. I'm like, wow, the S&P isn't down too much considering. And then we start to roll and hit 3% to the downside at 3 o'clock. The difference between this week and last week is premiums are expensive to trade put hedges. So the good thing is, or somewhat good, I don't have too many call positions on outside of the TripAdvisor, some Lemonade freebies. Uh, so it the premiums last week. So you take a look at some of the trades I was looking at, especially when we had that pull and reversal from last Monday's open. I was looking at JP Morgan at the end of the day, and I think the stock was in the 260 or 258 or whatever, and the 245s were decent on a risk reward basis. Now you look, and the premiums, even at the open, were expensive, and even when we have the big move, you don't make as much on the put side. So when we get a bounce, because we'll get a reversal at some point, and it's going to rip the face off of people who are in the puts, right? It just happens. You have both sides, but I'd rather less just sit on my hands and wait for spec calls to do some bounces, as opposed to trying to get some puts right now. We'll see how premiums go as the week goes on. It's just tough. So that's kind of it's like UPB uses this analogy a lot. It's like your fingers stuck in the electrical socket, just staring at everything. I don't want to just get puts to get puts. So, I was looking at ServiceNow, which has Ralph Lauren, the $230 March puts. They were like $1.50 when I started looking at them last week. Then they were $2. A huge put volume came in, like 300 contracts came in on those on the 230s. They were like $3, and now they're 16 by 18, right? So just over a cut. So I mean, maybe in hindsight I should have got those, but I typically it's just not how I trade for protection. I usually look for weekly spec positions. So we'll see how things play out. I always try to be cautiously optimistic here. I just want to see like a reversal. So if I don't know if it's gonna be tomorrow, we have a gap down and reversal. I don't know if we have a gap up, then a reversal to the lows, capitulation and bounce. I'm just hoping it happens here soon. But I always got to keep things in perspective. Doesn't mean we can't continue to go. And now you see people are right. The end of this long bull market, it's over. People are putting the RIP on the tombstone already for this market, and maybe they're right. Don't want to be in a spot where I start loading calls because I think everything's going to bounce back to where they were. But we'll see how things play out. And then you start looking at some of those momentum names today, and they're just, even with the market kind of just melting the whole day, you take a look at Reddit's, it's almost cut in half. 111 down 17% today. Strategy, 17%, coin 16%. You got the Tesla 15%, Upstart down 12%. And the thing, and again, back to the puts and the premiums. I was the MSTR puts on Monday. The stock reversed from like 290 after the crypto uh, summit, and then the crypto reserve. Uh, the news Sunday night. I was looking at the puts, and the 200 puts last week, the weeklies were $1, and then they went up. I think they closed at 2, and this is when the stock was at 250. Today, when strategy was at 250, same, actually later time frame. So technically speaking, it should be less expensive if you take it all in context. And when it was at 250, those puts were like $3 or $4. So it's just a lot harder to do risk reward trades when the premiums are kind of like, I wouldn't call them wacky. I'm not saying you can't make money, um, but it's just I'm not going to buy a $3 contract and hope for 100% with the possibility that you get out of your seat and go to the bathroom, come back, and you see a 2% reversal on the S&P and you put cut in half. It's just that's just not the type of risk reward I trade for. So maybe as the week progresses, there'll be some better opportunities for put hedges and more spec calls. All right, so that's kind of the overall market. 563 is a big spot. Then you start going back into September. I mean, we have the other thing of note is the VIX still isn't over the August highs. So back when we had the yen trade craziness where the VIX spiked all the way up to 70, we're still not over. I think it remained elevated for a couple of days in the 30s. VIX is up here at 28. We're up 19% on the VIX. I remember back in October and November when the election was coming and yields were going up, the VIX was elevated in the 20s. So, it's kind of like you look at some of those things. I'm like, either we're not done yet, or the market's doesn't have as much a fear right now. I don't know. We'll have to anyway. So that's kind of the overall market, and this is the VIX. I mean, just take a look at the VIX. It doesn't look like we've had this 10% move in the Nasdaq over the last since its highs. Well, more than that now. It's probably 12-13% from its highs and 10% in 2025. All right. So now just into and last but not least, gold. So I'm looking for other hedges, and I've been testing my patience not to add some GLD puts because my thoughts there on gold, or at least if you haven't heard them, I always think that gold is at some point is going to come back down to earth. And I always look for other ways. The miners right now, and they've reversed here. Dust and J Dust might be some names I look for hedges as well. I haven't put them on the watch list, but those offer double whammies, right? As the market goes down, miners go down, and then as gold goes down, miners go down. So because of that, you would think those two factors are in play right now. The reverse bearish, the bear ETFs for the miners might be a nice play as a hedge. All right, so that's those names in individual overall market. Now some quick individual names. Oh, and I also put on the watch list. And again, I was looking at J.P. Morgan, Goldman Spectacular. I put those targets 230. J.P. Morgan broke under 230 before. It actually just staged a $3 reversal here. Goldman Spectacular to its 200-day moving average. It's 200-day moving average. But again, you look at the Goldman Sachs puts, and I'm looking, and you have to play all the way into the 470s just to have a decent risk reward for at least how I trade. And we get a reversal here, and you sit here all day on the puts. One quick reversal, and all those profits are gone. All right, and Visa, MasterCard, which continue to be rocks. I think Kramer said it this morning, rocks of Gibraltar, right? All right, so now I did make some trades this morning. Two names. So Caterpillar, which has shown relative strength, even last week during the market carnage and market volatility, was green this morning for some of the morning. Well, went and got some more calls. Of course, it pulled back, then reversed to highs again by the noon hour, and then back down to lows just a while ago. Starting to bounce here. You start looking at 200-day moving average and 50-day right there, 359, 362. If the market finds any kind of footing tomorrow, I can see it seems like it's ready. It's just eager to take off once the market finds a little footing. And I think it could. It did it well. It did well last week with the market under a little bit of weakness. I wouldn't be surprised to see it continue to show relative strength. So I got those calls similar to last week. I think I got the cat calls on Tuesday or Wednesday, and they wound up paying at the end of the week. Hopefully, I don't have to wait to the end of the week for those to pay out. And then Biogen. Why don't I have Biogen on here? Where is it? Up. Also, another name. I think it's going to be up 6, 7, 8 days in a row now. That Regeneron, Gilead, VRTX, all relative strength in the midst of all this market weakness. It seems like those names are just going to continue to ascend. So I was actually looking at the weekly strikes on Biogen, but I'm like, let me get some more time. Went and got strikes into next week. I think that'll perform well. And then I made a little header in the chat room. I think it's probably a good idea. And I mean, who knows if we're at the bottom, but there's so many oversold names. I think it's good to have a list of names that that if we do start to reverse to find some bounce trades on, I like TKO Group. It was just added to the S&P on Friday. Typically, you would see these names up quite a bit. Just a great story. So you take a look. It's already well off its highs from mid-February. That's a name I'll be watching. And almost looks like a pincher's forming. DocuSign reports earnings after the close on Thursday. That was a name I was watching back when it was up near 100 at the end of January, February. That one's come down 25 bucks. It had great earnings last quarter. Had great earnings the quarter before that. I wouldn't be surprised it's going to have great earnings again. The issue with earnings is right now those names have just been destroyed even after beats and raises like AppLovin, Reddit. Um, well, Reddit actually had great earnings, just didn't perform well. And then Roku, of course, right, which is way back below where it was at earnings. But definitely an animal we watching for bounces. And then brings me to Roku. Roku back to its 200-day moving average. Hasn't been there since November. Uh, my thoughts there. I mean, take a look at 1, 2, 3, 4, 5, 6. I don't even want to do the math there since it hit 105 post earnings. But at some point, either it's going to be like M&A or it's going to head off on a reversal. Still like Lemonade here, TripAdvisor, which actually was looking good Friday. Still like that one, but it doesn't make sense if the market environment's not going to cooperate to try and chase some of these names, or at least try and get ahead of some bounces because maybe there's more weakness coming. 563 broke. I think it's pending anything crazy. I think 540 is going to come now on the SPY. It's just a matter of when and how. And I was saying on the rant this morning, we can get down to 555 today, rally up to 570 tomorrow, then back down under down to 550 on Wednesday, and then back up to 565. And with that, it tests your patience unless you're very nimble to try and time these. And by the time you time, you're bound to make some mistakes that offset profits. So to me, I just continue to keep things small, open to spec weekly positions, keeping them the dates tight until I feel a little more confidence or conviction. And that's that, folks. If you haven't been around the market, some of the best weeks and days can be in some of these market moves, and reversals tend to be the best plays, right? The Friday reversals when premiums are only pricing in date, 0 data expiration, and you're in some days it's already happened. Puts in the morning, get the reversal, close them out, go calls in the afternoon, into the calls in the morning for an afternoon bounce, and some of those when they come to fruition can be very profitable, right? Anyway, that's it, folks. Let's have a great afternoon. I'll be back. Sorry about the audio issue before. Rock and roll.